So welcome back. This is the final part 4, where I do some chart analysis for you. Okay, just a little bit of a reminder. So black numbers in the right hand column, they're just going to be support and resistance levels based on trend lines. Brown numbers are breakout levels. You know, it may be a support line, but if it breaks through there, then obviously I'm expecting the market to keep dropping. Claret numbers are where I've identified where I believe that there's going to be support or resistance, or they could be sort of double or triple tops or bottoms. Pivot points are also relevant on the 30-minute chart, so just make a note of those. Okay, so I mean, stocks had a reasonable week last week. They ended pretty strong, or just off the highs, but again, there's so many investors that are sort of expecting rates have peaked or peaking, and of course that the debt ceiling will be resolved as well. So when we look at the Dow, that got through sort of last year's April, May and August highs, which I always keep an eye on. It has been through that already several times, but they're a specific level that I sort of keep in the back of my mind. Okay, so when we look on the daily, I've got resistance at 34,411 and also 34,042. Supports at 32,991 and 31,336. Now the 31,336 is also a breakout level should it get down there. On the 30-minute chart, I've got resistance at 33,754 and also 33,541. With support at 33,413, and then I've got 33,263, which is also another breakout level. Moving on to the S&P, it pretty much made a good high for sort of quite a few months this week. And now we're looking at resistance at 43.04 and 42.27, with support at 41.11 and 40.51, which is a breakout level. And then below that, way below that, is support at 38.09. I'd put these in because, well, for one, you never know what's going to happen in these markets at the moment. But, as I always say, especially on the dailies, that these levels rather, can stay in place for weeks, if not months. So they're always worth just making a note of. Okay, so the S&P on the 30-minute, I've got resistance at 42.25 and 42.07. I've got support at 41.96 and I've got support at 41.61, but that again is another breakout level if it gets through there. Nasdaq was strong, sort of bursting through those April, May and August highs again, and it closed pretty strong at the end of last week. So we've got resistance at 14,301 and also 13,916, and sort of got this the previous highs from sort of those April, May, August times, which may act as a little bit of a support on the way back down at 13,551. Below that, support at 12,928 and 12,525, which is also a breakout level if it gets through there. On the 30-minute, I've got resistance at 13,921 and also another trend line at 13,858. On the support side, I've got 13,756, but again, that's another breakout level should it get through there. And then support at 13,629 and 13,476. Remember they're the tech stocks. And moving on to the small caps, again, they've finished sort of fairly well considering just all these expectations. The debt ceiling will get sorted out, but of course we've got FOMC minutes this week and PCE, the Fed's favourite inflation indicator as well. So, okay, so on the Russell Daily, I've got resistance at 1973 and 1828. With support at 1739 and 1694, which again is another breakout level. On the 30-minute, I've got resistance at 1808 and 1779, and I've got support at 1774 and 1768, which is a breakout level, but as you can see, that's coming in. It's going to break out one way or the other anyway, so let's see which way it's going to go. A lot of it's going to depend on the data this week. Moving on to currencies, so the dollar strengthened towards the end of the week, and so we got the pound against the dollar. I've got resistance at 127.24 and also 125.54. Then I've got support at 123.67, 122.04 and 121.97. On the 30-minute, I've got resistance at 125.26, 125.02 and also at 124.56, with support at 124.47 and 124.04. As you can see, we've got a very tight wedge there, so that's going to break out one way or the other. Moving on to the euro against the dollar, we've got resistance at 111.20 and 110.34. And support at 107.58, which is a breakout, and 105.25. So that started to move down again, more through the strength of the dollar rather than weakness of the other currencies. On the 30-minute, I'm seeing resistance at 108.94, 108.66, 108.49 and also 108.45, with support at 108.13 and 107.78. Remember, you can always take screenshots, or you can just take a picture on your mobiles if you want reminders of these. So moving on to Bitcoin, it's just been ranging. So when we look at that, although I'm getting to the point where I think it is going to break out very soon. So resistance I've got at 34,411, 33,995, 32,991 and 27,507, with support at 26,472 and 24,035. And on the 30-minute, not too much. I've got 27,515 as resistance and 26,375 as support. But again, that sort of looks as though it's getting ready for a breakout one way or the other. It's been a little bit depressed because of the dollar strengthening as well. And here we're looking at the Bitcoin against Nasdaq. You can see that they're sort of diverging a little bit at the moment, and I think, as I just mentioned, that the Bitcoin is suffering a little bit from the pressure of the dollar rallying, as do commodities generally as well. And that leads me on to gold. As you can see, that's been selling off again as the dollar got stronger. And of course, you've got the risk reward, the risk on, risk off scenarios as well. Although that, they haven't necessarily been playing out as they should in recent months. Okay, so gold resistance I've got at 2062 and 2028, so they're quite a way away. But I've got support at 1953, 1928 is a breakout level, and then support at 1828. On the 30-minute, I've got resistance at 1996 and at 1984, with support at 1978 and 1956. And again, we're getting into another one of those where it's destined to break out soon. At the moment, it looks a little bit more on the downside, but I can't get too bearish of gold at the moment. On WTI, I've got resistance at 73.61 and support at 68.02. On the 30-minute, I've got resistance at 73.78 and 71.99 with support at 70.78. Again, oil's just taking a breather at the moment. It's waiting for its next push. Is it going to be heading back down into the 60s, or is it going to start moving back up and try and test the 80s? If economically at the moment, when we look at supply and demand, it could be a case of when we're thinking about that any chance of a recession or any chance of consumers having less money than they already have, that could impact the demand for oil as we go through the rest of this year. Of course, OPEC cut by over 1 million barrels a day at their last meeting, and it had that spike up to 83, but seeing it back here, it didn't have the desired effect. It was $75 before they cut by 1 million barrels a day, and now it's still below there. So yeah, so that's pretty much the end of the analysis for this week. I'm sure you're bored with this, but you never know. You probably, everyone needs help now and then. So, okay, so our daily newsletter, just sign up for it. It doesn't cost anything, and you get global news and my views. And then also, if you're interested, we offer fresh daily chart levels and pivot points. Now, one-day workshops, again, if you're not trading, it's going to help you to perhaps decide whether it could be your next career or whether you can turn it into a second income, or it can be used just to fill in any gaps that you've got. Now, 1 week courses, if you're a starter, we can have you up and running in 1 week. We're going to give you those real basic foundations that you can grow and create your trading career from. And as I always say, if you've got an inner trader, a week is enough to help me find that inner trader if it's actually there. It's not in everybody, trust me. And we created a new course, which in a 1 week course, which actually includes a free attempt to qualify for a funded account as well. Now, if you're really serious about trading and you want to sort of really get that comprehensive knowledge that's necessary across all the different asset classes, then our accredited masterclass, which is designed to do exactly that, we're going to provide you with all the knowledge and trading tools that you're going to need to navigate these markets and any market. Trader mentoring, in case you're already trading but you're struggling to get to that next level, we can help you with that. Consulting, we do that hedging for FX and commodities. If you're looking to sort of for any content, again, just to help you understand certain areas, then we provide lots of educational content to individuals, exchanges and brokers. And I'm doing more and more webinars these days as well for different brokers. So just keep an eye out for when they are, because, you know, they're very helpful. I mean, the one I did last week was, you know, about mistakes that traders make. And, you know, that again, it's just sometimes it's just a refresher or a little reminder that you've forgotten something that can be really valuable. And, you know, if you don't want to use your own capital, or you don't have that capital but you still want to get into trading, then that funded trading account could be the answer for you. Of course, you've still got to qualify. Apart from the 1 week course, we always we do this 1 day workshop as well to help you prepare for it, so that might be another option for you. And of course, if you've got any questions whatsoever, you can contact us at info@cymaxfintech.com. And as always, my email is chris.tubby@cymax-int.com. So, you know, just a reminder, there's lots out this week. You know, the debt ceiling is going to be the key focus for everybody. Then beyond that, we've got FOMC minutes, PMIs right across the board. And then, of course, you know, the Fed's favorite inflation indicator, which is PCE at the end of the week. So it's going to be an interesting week. The markets are certainly going to have some big moves again, as far as I can see. And all that leaves me to say is, you know, I wish you the best of luck with your trading. Be lucky, and I hope to see you again next week. Bye for now.